Friday, September 14th, 2018, Maneco 64, home of alternative economics and contrarian views. This morning, I'd like to talk about war and debt and how the cycle has worked in the last century. Before I go further, I'd like to thank everyone that has contributed to the channel with donations or contributions through PayPal and Patreon. There are links below in the description if you'd like to contribute, and also like to thank for all the support of all the for all the new subscribers and existing subscribers. And yeah, keep commenting. I will try to reply to as much as possible, and keep sharing my videos, please. That it helps. We are over 20,000 subscribers now. So before I look at the war and debt and what I think is happening and what I think would happen to the dollar if there were to be a war, yeah, before I look into that, let's look at the markets. It's 8 a.m. London. So what are we doing this morning? Spot gold is rebounded from the late closing prices of yesterday. We are at 12.06, up about $4.50. Yesterday was a very good day for gold. Most of the day we got up to like 12.13, I think, which is a key resistance. On the way down in the past few months, there was a support around 12.12 in gold. Once we broke that, that's when it accelerated even further and bottomed at 11.60 on August 15th. So it looks like someone's watching that 12.13 level. That was the exact high yesterday. And even though the dollar stayed really weak late yesterday, for some reason gold came straight down, tested 1200, and now it's rebounded. So still here in the doldrums, I would say. That 12.13, 12.12 level, key resistance for now. Silver outperformed slightly yesterday, but not really doing too well right now, I would say. The outperformance was not big enough. For silver to really be outperforming gold, you need to see silver be up like 1.5% when gold is up maybe 0.5%. And yesterday it wasn't like that. Silver right now 14.22, up 6. Range has been 14.14 to 14.27. The gold range actually has been 1200 to 1207. So we're near the top of the range. The stock markets continue to yeah, they never seem to really do much on the downside except for earlier this year. So we're up 50 right now. The Dow futures 26,190. S&P now back above 2,900, up 4 points, 2908. And the Nasdaq is up 1/3%, 75.85, up 25. Currency-wise, right now it's still fairly quiet, even though the dollar had a bad day yesterday. But so we are at elevated levels compared to when I spoke yesterday. It's at 131.09. The pound is 131.09, unchanged. Euro 117.01, up 11. So yesterday we were, I think, 116.30 when I spoke. We had the Bank of England and ECB. Bank of England as expected, ECB as expected, and again, all talk, nothing new really from the ECB. They said they're gonna start raising rates in the summer of 2019. They could still change their minds from now on. So, and that they're gonna stop QE as well soon. We'll have to see. Dollar is strength. Yeah, when the dollar was weak yesterday against the pound and the euro, it actually gained quite a bit against the yen. So that's one of the reasons why I think gold wasn't able to go much further. They kept the yen weak. So the dollar yen now is almost up to 112. It's 111.90, unchanged from yesterday's close, late close. Dollar dollar yuan is unchanged, it's 684.80. Crude oil has come off the recent highs. The WTI is 68.68 and Brent is 78.09. Yesterday I said Brent was near the highs. I didn't mean all-time highs because the all-time high was in '08 when oil reached like 150, the WTI. I'm not sure where Brent went. So it's the recent highs. It's been around 80 in Brent. I even saw yesterday, I went out, there's quite a few headlines in the papers now about how petrol, or the British call gas or gasoline petrol, how the price of petrol is really high now. I'm sure they're going to complain about the oil companies, but there's nothing going to be said about the fact that the pound is so weak. Anyway, what else? Turkish lira, of course, we had the rate hike yesterday to 24%, 625 basis points. And it's actually continued to do fairly well. It traded down below, the dollar traded below 6 lira. And when I did a live stream yesterday, it was around 620. And right now, the lira is still fairly strong. It's at 602 against the dollar. But I noticed that the Brazilian real has had a tough time. It closed above 420. So, yeah, the Turkish problem might be contained for now, but look out for Brazil. The bond markets, which is something I'm going to talk about later in the video now about war. Well, the 10-year yield's at 297. That 3% still a big barrier. And the Italian 10-year yield is at 296. So not much going on there too. What about, war and, how can I say, interest rates? That's what I wanted to cover. I mean, why did I say war? I mean, well, there's a lot of talk about war. There has been in the last few years, even though we haven't had a major war since 1945. There's a lot of talk of World War III. And you look at the headlines right now, Zero Hedge, one of the stories here says, on the brink with Russia in Syria again 5 years later. It's all deja vu all over again. In Syria, with the U.S. on the verge of a confrontation with Russia as Donald Trump faces his biggest decision yet as president. Is Donald Trump really want war with Syria? Is it more the deep state that's pushing him? I remember a few months ago, he said he wanted to withdraw from Syria. And then a week later, he said, oh no, we're not going to do it anymore. So it makes me wonder if this is all the deep state trying to hijack Donald Trump's policy of peace and cooperation. And that's where it comes to, I think, where war and debt, right? And interest rates. I'm going to show you a chart right now. And it's of the U.S. Gross federal debt to GDP. You can see that in the 40s, that grew massively. That spiked, from around 50% of GDP to over 100, almost 120% of GDP. That, of course, was the debt that the federal government incurred to fight World War II. So, am I saying World War II is right? No, but it's normal in times of war for a government to incur that amount of debt. Of course, after 1945, the war ended, and we had up until 1980, 35 years of peace, growth, baby boomers, economy growing, demographics helping, and even though interest rates went up from 1946 to 1980, even though that happened, the government's debt to GDP was able to be paid off. All the way down to almost 30% of GDP. And that was when interest rates got up to 20% in the early 80s. So what I'm trying to say is that after World War II, there was peace, there was cooperation, not with the whole world, but Western Europe, emerging markets in South America and other places, not the Soviet bloc maybe, but we can see that helped the debt burden be chipped away. It was, of course, the period, even the Fed back after in the early 50s did QE, and they kept interest rates artificially low, but they had the growth to pay off the debt. And now, though, as you can see, we haven't had a major war, and we're almost back up to that 120%. And personally, and I'll show you the interest rates now. You can see the interest rates. The cycles are very long. From after World War I, interest rates bottomed all the way to the end of World War II, around 1946. And then for the next 35 years, interest rates rose. And that also, I think, helped pay off the debt because the government couldn't borrow as much. And then since 1981 now, with interest rates going down, we've been able to build this massive debt again. But we haven't had a war. So what I think President Trump is trying to do is, and one of the reasons why he campaigned for peace and sovereignty and cooperation in respecting other countries, is because I think he wanted to go back to like a post-war World War II scenario of cooperation, economic growth, in order to try to pay off this massive debt. Or maybe he didn't, but let's say he did. But now with all the talk of a war, I think it would be the end of the current monetary system as we know it. I know there's been a lot of talk about reset and everything, but it is possible, though, and I haven't talked about in the past, that if there's peace and cooperation, if the UK and the US, instead of like vilifying Russia, actually go there and cooperate, increase trade, investment with every country in the world, then we could see the dollar survive. But it doesn't look like that's what the deep state wants. It looks like they want a war at all costs, but a war would totally destroy the dollar, in my opinion, because you need to start a war from a position of fiscal strength, and right now we're not in that position. If you enjoyed this video, please give me a thumbs up. Subscribe to my channel if you haven't yet. You can also follow me on Steam at DTube and on Twitter. I'll talk to you later. Take care. Bye.